When I started my investment journey, I said, no, I want to take control of what's going on. So that's when I chose to do like a self-directed investing account. I discovered your channel and I said, well, who's Mo? What is he doing? So he has only one, well, yeah, I think you have 3 ETFs, but you have one big core ETF in 90% of your portfolio. It's XEQT. So what is XEQT? I said, okay, maybe that's something I should dig into. And then there were other people, I think Moementum and other people that had XEQT as their core or even only one holding. And then I found FEQT. I said, okay, well, that's interesting. FEQT, what is it? And I opened up FEQT, I look inside the hood, under the hood, and I said, well, that's interesting. FEQT is not using market cap. They are using factors. What is it, factors? What is it? So I went to Blossom. I searched for factor investing, and then I found a great Blossomer, ETF.go. And ETF, and I think you had it on your show.
Yes.
Marcus. And Marcus, he has a huge background in ETF management. As an investor, you need to have a strategy in place. You need to put down on paper, what kind of investor am I? You know, am I a stock picker? Am I like a multi-ETF investor and passive income investor? What am I? For many people, I would say, you know, if you are young investors, $10 a day, it's a great start. It's never too late. If you're in your 40s, even in your 50s, but like I was in, it's not too late to plan, make simulations, have a target, and then be consistent with your goal.
Well, hello everyone and welcome back to another episode here on Moementum Finance. And I'm super honored and excited to be welcoming Regis.
Well, Mo, thank you for having me. It's such a pleasure. I feel like I'm invited to Anderson Cooper on CNN or something. You know, it's really amazing. I'm thrilled.
I'm humbled. You know what? I had the opportunity to have your son, Anthony, the Rocket Man, on the show. And, you know, how the show can go on if I don't invite the man who's behind this whole journey of, I believe, I'm not sure if you joined Blossom. He might have mentioned it. I think you joined before him.
He's the one actually who went first on Blossom. Yes, he's,
okay.
Yes. And and actually, I was a bit concerned first because, you know, when you're a kid, well, he was, I think, maybe, I don't remember, maybe 19 or 18, 19, starts to talk about, investing money, and he's on a social network and everything, and you don't know about it. You said, well, I hope he won't get, into something weird where, he will have to maybe, just spend money. But, he always been a smart guy, a smart kid. I had a look at Blossom and I said, well, that's really fun. It's really nice. And it was like a really small community back then. So I joined Blossom in February, I think 24. And he joined 3 or 4 months earlier, so in 23. Yes.
Well, that's awesome. And I believe now the entire family, for the most part, is on Blossom. So that's super good. Well, before we even go there, Regis, why don't we have you introduce yourself a little bit better to our audience, for those who may not know you quite yet from Blossom, and then we'll get going from there.
My name is Regis, or Regis, depending on where you are in the speaking world. My last name, actually, Holstein, is like, you probably know about the cows, the Holstein cows.
Yes.
So I'm not related directly to the cows. The last name Holstein, the genealogy actually is a little bit confusing, but we are a family of travelers. So my ancestors, they were coming from Eastern Europe and they settled down in France. Like many people at that time, they were traveling all across Europe and everything. So they settled down in France in the early 20th century. Because we continue the tradition, we were eager to discover the world. So when I was a teenager, we decided to go somewhere else. So we had a couple of possible countries. We had Australia, we had Canada, we had Germany and everything. And so we made a list of what are the pros and cons. And of course, we are, I would say, phobic to insects and the big little things. So Australia is a great country. And I really want to travel there someday. Maybe no, I don't like spiders. So that was a big no for me. Canada looked very peaceful. You have bears and you have seals up north, but It's a very, very, I would say, peaceful and quiet country. And so we went for a month first to get a feel of the country. We went to Montreal, we went to Ottawa, we visited both cities, and then eventually we settled down in Montreal, mostly because it was mainly, I would say, well, French speaking. So for French people, it was easier, to basically, to make that transition, because it's still, even if it's French speaking, it's a different culture, so you have to adapt to the culture, but at least you don't have to adapt to the language a lot. So even though there are some differences in French, but it's still French anyways. So that was easier. So yeah, so that's how we moved to Canada 35 years ago. It was a big adventure, and I loved it.
That's amazing. Yeah, making that switch. Funny enough, you mentioned Australia because I was at similar crossroad several years ago before I moved to Canada. I have a twin brother actually, and he was the same path. So at the time, we were living in Malaysia in Asia, and he decided to go to Australia. So now he lives permanently in Australia, and I moved to Canada. So kind of our path took a different turn. But I visited Australia; it's super beautiful, and he visited me here in Canada, and he loved it here too. Both countries are super nice.
Absolutely. But I think that's what makes Canada great, I think, is that you have so many people coming from so many different parts of the world with their own stories and their own background, and that's the beauty of Canada, is that everyone actually just goes along, we just, it's like a big I mean, so many cultures, so many point of
Exactly.
views. And there's a lot of respect for everyone. I mean, and I really want this to continue moving forward as well. It has to we all respect other one's point of views and cultures, and we all move forward, with the same goal, which is to make that country work economically and for centuries to go. So
Yeah,
yeah, that's
100%.
that's the spirit of Canada.
I love that about this country for sure. You've built a fascinating career in translation as well, and you're an entrepreneur, and you've shared some of that as well through your stories on Blossom. How have that entrepreneurship experience and entrepreneurial desire shaped the way that you look at investing and finances?
I love this question because when I was 20, 22, or yeah, roughly 23, I started as an employee back then in Ottawa. I won't name the companies, but it was like a big IT company, because Ottawa back then was like a big IT, like a northern Silicon Valley. There were lots of IT companies. And I quickly moved up in the ladders, and I was a manager over there for translation services. And it was nice, but I felt like I was like locked, in place. I couldn't do what I wanted. Of course, I was just an employee, there were hired people. So that's when I realized that no, I want to actually to invent things. I want to do my own business. I want to shape, how I want to move forward. So that's when I launched my company. And actually so I always had that mind. And from an investor perspective, I could have chose, like manage portfolios and, things that are, controlled and maybe some people would say safer, but I don't really think so, at least from my perspective. So when I started my investment journey, I said, no, I want to take control of what's going on. So that's when I chose to do like a self-directed investing account where I pick up basically my ETFs myself. And that's also why I chose ETFs, because, and all in ones, and we'll talk about
Hmm.
all in ones, is that those basically, the thing is, when you're an entrepreneur, you have to know your limits and you have to know your capacity, because otherwise you eventually fail. And I know that, for example, for my business, I hand off everything that's accounting related to accounting firms, because they know the drill, they know their job, they know, how to make sure that I pay what I must pay to the government and that I don't pay too much to the government. So I just pay, I don't make mistakes by not paying enough or paying too much or missing important rebates or missing important programs that I could take advantage on. And it's the same for investment. So I didn't choose like individual stocks. I choose
Hmm.
ETFs that are managed by, knowledgeable people, but I want to know what's inside the ETF. So I don't just blindly follow the ETF. For my all-in-one, we'll talk about it, FEQT. I open it up. I say, okay, what's inside? What's going on? Okay, you have all the different things going on, and what is it? So I research everything. I research factors. I research, what it means to be globally diversified. What are the percentages? So that's basically how I take my entrepreneurship spirit to the ETF world. Is that I want to know how it works, but I don't want to make it work myself.
Mhm.
This is done by knowledgeable people who know how to do it. I don't want to rebalance factors and guess what will be the best factor in 6 months. I have no idea. So people take care of that, but I want to know how it works. So in each of those different underlying ETFs, what are the holdings? Am I holding Apple? Am I holding Microsoft? What's going on behind the scenes? So yeah, that's basically how view. I mean,
It's so incredible. I still remember these posts that you do with Anthony, the two of you looking closely under the hood within
yeah,
FEQT. What are the holdings? How, and not only that, you were the first one I actually brought to my and many of folks' attention. It's like, hey, XEQT has recently started picking up some of the S&P, and then we were trying to understand, hey, why is like it's that? It's like we never knew even about that one. So it was really, really interesting because you have that keen eye and attention to details, and also goes back to your earlier comments of wanting to know what you have and what is underlying those funds, not just blindly buying
right.
into it because everybody's buying into it. I love that. I really, really appreciate that. Speaking of investing, you did even share that you started a bit later. So I believe you were closer to
Yes.
49 that you started investing in the market. What made you make that decision? Because you could have might as well continued with just focusing on your entrepreneurial business. Why investing in the market?
Well, you have to thank the Rocket Man because he's the one who opened my eyes on
Yes.
that world, the world investing. That I had no idea, that I could go this route. In my mind, it was still complicated when you wanted to invest. I had no idea. Do I have to go to a bank, to talk to someone? I say, hello, I want to invest. That would work, but in 2025, maybe it's not, in my point of view, maybe the best way to do it, because you're still relying to a bank manager, maybe who's not, who also, needs to make money on top of your investment. So in 2025, there are so many easy ways to do it. And thanks to Anthony, I discovered, well, I'm using Wealth Simple, which is an online trading platform you can put on your phone and on your computer on the web. There are many others as well. And I wish I had that. And I think we'll talk about this. I wish I had that 25 years ago, because it would have been so easy to build wealth as a young man without without needing to talk to banks and to talk to adults, and about things you don't understand. You'd go to Blossom, talk to people that have the same views as you, the same interests, the same discovery needs. Then you go to Wealthsimple, for example, and then okay, I can buy an ETF. Okay, I can buy a stock. And then, you slowly, but surely, you're building something. And yes, so I discovered that at 49. And I think it's okay because I'm in a position where, even though I did not invest before, I still have the financial capacity to make something happen before my retirement. Um, if I was, let's say, an employee with, I would say, a fixed income, fixed like annual salary, maybe that wouldn't be able to increase much for the next 10 years, for example. It would be a little bit difficult, to maybe get enough money within, let's say, 10, 15 years to compensate for all the
Mhm.
time lost before. But because I'm running a business, I can also have the business invest on itself now, which basically, in addition to my own personal investments, the business can also invest on its own. Basically, I'm basically able to, I would say, within 10, 15 years before I should retire, get something, I would say, interesting for my retirement in place. That's, I would say, even if you're not in that position to have, I would say, the ability to use money, it's still important to, at 45, 40, 50, get started. It's never too late to get started.
does it have to do as well with why you chose to have that consistency? Like most recently, you shared how you have that
Yes.
100 a day, put it and set it and forget it, invested in your fund, and continue building on that.
Yes, yes. Well, that's because also I'm in life, sometimes I'm inconsistent. So if I don't, I would say, because sometimes you forget, and you
Yeah.
say, oh, I missed that day. Oh, that's okay. I'll do it tomorrow, and
Hmm.
so you're not, in the end, after 1 year, maybe you missed some important, I would say, opportunities to invest. Whereas if you do it, I would say, well, I picked up an amount which is very big for many people. I would say, if you are young investors, $10 a day, it's a great start. But because I wanted to make up for the lost years, I chose $100 per day. And doing it, I would say, set it and forget it. And that's why I love Simple, and probably other platforms allow it also, is that I set it up and it just happens behind the scenes. The available balance I see on my checking account already takes into account, I would say, the investments that were done the days before. So I don't spend money that I don't need to spend. That's the important thing, is that the money that needs to be invested is already taken off every day. So what's left is what I'm able to spend. And this way I don't miss any days. It just happens. It's really amazing because um, I started in 2024, February 24, and we are in September 25th, and I've crossed the $50,000 milestone, which is
That's so
pretty,
incredible.
it's pretty interesting because um, as when I was discovering, investing and how it works, most people tell me you need money to make money. So yeah, 10K is great, but you'll see that 100K is better. And of course, if you get to the million, of course, like a 1% movement on $1 million capital is makes big money, of course. So the more money you can get into the market, the more, I would say, expansion or increase you will see from the movement of the market. That's logical, of course.
Mhm.
So my goal has always been to reach 1/10 of a million, so $100,000 as quickly as possible, to be able to get money working and working and working as quickly as possible. Of course, as always, to make up for those lost years. So
It's so incredible that you have
yes,
a plan in place and fully aware of the some of the opportunity cost of, hey, you know what, had you started earlier investing in the market, it would have been fantastic, but you can't change the past either. But how can you control
yes,
what you have ahead of you? And by making those smart decisions, being diligent, and also very keen around the whole notion of investing in taking your future in your control. So that's really, really powerful. Let's speak a little bit about the holdings too. Uh, Regis, you did touch on FEQT. It was at the time that I think you were probably one of the first folks that I started hearing a lot more about FEQT from, because you really go under the hood and elaborate what it has within it, why you've chosen it, and then in the conversation with Anthony, he was also speaking very highly about the different factors. Tell us a little bit more. I know at some point you made also the switch between FEQT going to XEQT, but then switched back. I believe right now you have two holdings, correct? Tell us more.
yes, 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 yes. Well, when I got started on Blossom, the one thing that I was wondering is, what should I buy? There are like thousands of ETFs and stocks. And so should I like buy? I was reading what people was saying basically, and they said, well, you can buy stocks, that about like things that you own, like Apple, for example. You have an iPhone, let's buy some Apple. You have a Tesla, let's buy some Tesla stock. It says. Well, maybe that's a way to do it, but I want to do it for the long term, and I don't want to watch the stock every day, to see what's going on. So I want a hands-off approach, something that works by itself. I don't want to monitor the Tesla stock to see, if maybe I should sell it or buy more. So I just want something that works, I would say, almost magically and automatically. So quickly, I understood that I should go, well, for my own profile, my investor profile, I should go to the ETFs. I should go to the those funds that are managed by companies like BMO, BlackRock, Fidelity. And so they manage the content for you. So you don't have to buy individual stocks. So then there was a question, should I buy an ETF that contains oil company stocks, or should I buy an ETF that contains, let's say, one that contains the health industry, one that contains the automotive industry, and so a lot of ETFs. And then that comes back to my belief that no, it should be simple. I mean, it's too complicated for me. I don't want to rebalance and all those ETFs like every week or every month, every year. No, but something simple. So then I discovered your channel and I said, well, who's Mo? What is he doing? So he has only one. Well, yeah, I think you have 3 ETFs, but you have one big core ETF,
That's right.
90% of your portfolio. It's XEQT. So what is XEQT? I said, okay, maybe that's something I should dig into. And then there were other people, I think Moementum and other people that have XEQT as their core or even only one holding for big portfolios. Well, that's interesting. So let's dig deeper into that. It's my entrepreneur mind. What's going on? What's this thing? So I discovered XEQT it's an all-in-one marvelous thing. It's managed by BlackRock, which is a big financial company. And it basically contains the entire world market into one thing. You buy one unit of XEQT and you own the entire world market. Wow, that's amazing. I want that. That's amazing. And then, so I said, okay, well, that's nice. XEQT is amazing. It's a great thing. But is there something else I should maybe try to find? I mean, is there something else? Because, I like to think different. So XEQT is great, but is there something that maybe I would find better from my perspective? So I said, okay, well, there's VEQT, there's MEQT, there's CEQT, there's ZEQT. There's so many EQTs. So they are roughly similar. Sometimes there's more exposure to US, sometimes there's more exposure to the emerging markets, but they all have the same philosophy. They are basically sorting the companies by market cap, which is great. It's like a self-revolving, sometimes the companies that are at the bottom, they will go up and the top will go down. So it will work by itself. But maybe there's something else. Maybe there are maybe someone is doing it differently. And maybe that's why I was always a fan of Apple back in the early 2000s and even in the 90s and 80s, because they were doing things differently. So I said, okay, let's see if another company is doing something differently. And then I found FEQT. I said, okay, well, that's interesting. FEQT, what is it? And I opened up FEQT, I look inside the hood, under the hood, and I said, well, that's interesting. FEQT is not using market cap. They are using factors. What is it, factors? What is it? So I went to Blossom. I searched for factor investing, and then I found a great Blossomer, ETF.go. And ETF,
Marcus.
and I think you had it on your show.
Yes.
Marcus, and Marcus, he has a huge background in ETF management, and so I looked at his posts, and he was talking about factor investing, and that sometimes there are different factors, and you can actually, depending on the market cycle, you can pick one, and then you can pick another one. I said that's really interesting because you are targeting companies, but I don't want too much management. So FEQT actually is factor investing, but managed by Fidelity. So they are taking care of the rebalancing. And inside of FEQT, actually, you have 14 underlying ETFs. So it's pretty big. I think XEQT has maybe, I can't remember, maybe 5, I think.
5 or 6 max, right? Yeah.
Maybe 6. It's like one for US market, one for Canadian market, and the European Far East.
Yeah. Technically 4, you're right. But I think when they started adding S&P 500 might have brought it to 5. But typically it's been 4, you're right.
It's been 4, right? So 14 ETFs looks like a big mess. Lots of things to manage, and
Much more.
yeah. But what I did with Anthony is that because we're a little bit crazy and maniac, we took each of those ETFs and we open it up. So we open up the big FEQT box, and then we open up each underlying ETF box and what's inside. And basically, inside you have stocks. You have for each of those underlying ETF, you have about 80 stocks, and all those stocks are picked up depending on their factor. So what is a factor? A factor is, it's a characteristic of a stock that is really that you are targeting. For example, so you have, Fidelity is targeting 4 factors for each market. So 4 factors for Canada, 4 factors for the US, and 4 factors for the international market. So that's 12 factors. And then you have also one ETF for the small caps globally. So all those small cap companies that may be emerging and maybe developing. So this is actively managed. And also you have one ETF for Bitcoin, which is up to 3% of the all-in-one. So 3%, basically you're investing in crypto money, which is, I'm not necessarily a big fan of crypto money, but I say, it's something that maybe in the 21st century, something to consider if you want to diversify outside of the traditional stock market. So let me go back to those 12 factor ETFs. So for each of those markets, Canada, US, and international, you have 4. You have Moementum, have Moementum, you have value, you have high quality, and low volatility. So let's say I open up the Moementum factor. Every quarter, Fidelity analyzes the stock markets and looks for characteristics in the companies in the investing universe. That's how they call it. They look for companies that are basically meeting the characteristics of a momentum. They have like an upward trend, which is getting pretty steep and I would say consistent, and it's a bit complicated because there are a lot of sub characteristics that define the momentum, for example. But one of the key is that it's an upward trend. And so every quarter they look at the stock universe, let's say for the US, and they say, okay, we see that there are like those 80 companies that have that trend. So we will include them for the next 3 months into our US Moementum Factor ETF. And they do that also for Canada, and they do that also for the international markets, for the momentum. For the high quality, for example, high quality, low vol, and value, they do that every semester. So every 6 months, they analyze the market. They analyze the market and they say, okay, that's a value stock because it should trade at a higher price, but now it's trading at a lower price. So that's a value, it may go back up really nicely. But right now it's a bargain. So let's include it into our value factor. So that's basically, it's an algorithm. I'm not sure how it works. It's an algorithm. I think it's backed up by people that are validating this. But so far, it's been working fairly nicely. What we discovered with Anthony is that the FEQT, basically all-in-one, contains about, I would say right now, maximum 800 stocks. So compared to the, let's say, XEQT, VEQT, I think you have close to 10,000 stocks. VEQT, I think the last time I checked it, there were 14,000 stocks because it covers the entire stock markets, small cap, medium cap, large caps globally. So of course it's great, but it's highly diversified. It's highly diversified, but it's also highly concentrated because the market
cap, right? Yeah.
The cap, of course, you are investing more into the Mag 7, for example, into those that have the largest market cap. What we discovered, of course, with Anthony is that with Fidelity, you're investing in about 800 stocks. So it's really smaller. It's like 1/10 of XEQT, roughly. And also, you are not necessarily investing as your top holding because we made a list, and people can see that if they check out my post. We made a list of the top 30 holdings of both XEQT and FEQT. And what we discovered is that when you invest in FEQT, the top 10, for example, or the top 20 will not be necessarily the same companies as the top 20 of XEQT. Of course, you have the usual suspects. You have Apple, you have Nvidia, you have Microsoft, you have Royal Bank of Canada, but all of a sudden, as let's say the top 12, you have a company that is ranked maybe 800 XEQT because it's a very small cap, very small market cap, but it has a huge momentum factor. So it was included by FEQT as a momentum company. So it ranks up that company. So what I'm saying is that with FEQT, you are taking different risks, right? You are not just following the index of the world market. You are basically relying on fidelity to make the right picks for you. But you may actually, on the long term, the potential to maybe get more total returns if they make the right bets. So, for example, if they pick up the right momentum company, if they pick up the right value company, because these may actually, give you exposure to smaller company which will make huge gains maybe, and that you will maybe miss if you are just following the market cap. That's why I am actually very much in favor of FEQT from my point of view, because I find it potentially maybe a little bit more risky, even though the risk classification is the same. So it's medium risk according to that scale that you see on the website. Let's say for XEQT, it's medium risk. For FEQT, it's also medium risk. But I think over the long term, there's the potential to give you maybe higher returns. But how much higher, I don't know. But what I don't want is to have maybe lower returns eventually, which I hope it will not. But if I look at the past, because it's been in the market since 22. If I look at the past, if you had invested in FEQT in 22, you would have highly outperformed the other EQTs. Essentially, because from what we found is that, of course, you have that Bitcoin component, which gives some power, some horsepower to the fund, but also Nvidia was included pretty heavily in almost all the factors. So you had a fairly nice exposure to Nvidia, and Nvidia exploded. Like the value of Nvidia exploded in last year. So that's when FEQT actually had a pretty high increase in its value. I'll keep an eye on that. I'll see. And, Anthony and I, we are doing a lot of analysis on almost, I would say, not all the funds, but FEQT versus XEQT. We like to analyze both, because if we see that FEQT, if it's getting, really weird and doesn't make any sense, we will maybe try to balance it with more, maybe do a split of 50-50, with maybe XEQT or ZEQT, if you like BMO, and maybe another 50% FEQT. But it's never too late to change your tool. What I never changed, even though I tried the XEQT route at one point, what I never changed was my strategy. And I think that's something that's really important as an investor. As an investor, you need to have a strategy in place. You need to put down on paper, what kind of investor am I? Am I a stock picker? Am I like a multi-ETF investor and passive income investor? What am I? What kind of creator am I? And so I put down my strategy, and I want a simple all-in-one. I want a set it and forget it strategy, and that's what I'm doing with FEQT. Maybe I will include some maybe XEQT in the future as part of it. Maybe not, but I will always keep that strategy of hands off, all in one, set it and forget it.
It's super fascinating. Really, really inspiring. For me, analytics is an area that I'm super passionate about, which is why everything that you're sharing, I was listening attentively to it. I don't know if you've already looked into it. So if you have, let us know. And if not, I would love for if you and Anthony could look into it. Have you been able to essentially, as you're looking under the hood, take a close look at what are the holdings? There might be a lot, but what are the cumulative percentage of weight of those holdings that only, other than a Bitcoin, of course, that only FEQT has, which XEQT doesn't have? So let's say if there's XYZ blah 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 companies and there are 10 of them, I would be really keen to know. I know it just changes, but let's say at the time that you're doing the analysis, have you seen that? That would be one. And the other one would be for those ones that they're overlapping exactly, not just the top 30, but all of the overlapping. Let's say XEQT has 60% of its coverage to them, and then the other one only 30%. That would be really keen to know that percentage as well, if you have that.
Yes, yes, yes. Well, quick answer, and we will dig deeper and we'll report back on that on Blossom
I love that.
with a post. But a quick answer that I can have for you is that I'm pretty sure that all what's in FEQT is all except the Bitcoin, but all
All
what
of
we
them are
find
okay.
all what we find in FEQT, we also find in XEQT because XEQT covers the entire market. So you have exposure to all those companies. What's different is basically your percentage of exposure. There was that company. I don't recall. It was like a gold mining company, which has very small market cap, and it was ranked really low in XEQT. So basically, you don't see any movement. Even if that company increases a lot, you don't see any movement on your
It's
XEQT
tiny
stock
fraction, right? Yeah.
because it's noise to execute. The big drivers of XEQT are the big market cap companies and some medium caps, but the smaller caps, they don't have any impact until they move up to the higher caps. In FEQT, you had exposure to that gold mining company, but it was actually considered as a momentum company. So it was actually fairly high in the ranking of the momentum factor. So when we basically looked at a comparison chart of the top 30, that company was, I think, top 25 in FEQT. And I think you had almost 1% of that company. So for, let's say, if you invest like myself, $100, I would invest $1 into that company. Whereas I would have invested 1 penny with XEQT, so it would be
Huge.
negligible. It would be noise. But uh, I think that's the core difference is that XEQT gives you all the exposure of FEQT, but you wouldn't see actually, all the companies like the small caps, etc. They wouldn't have the same impact on the price of your XEQT stock. With FEQT, you would see maybe more movement because of those individual things, and that's probably why. Because that's why Fidelity rebalances and reindexes and rescan the entire stock market every 3 months for the momentum factor. Is that companies that are showing momentum signs, that's pretty risky, right? Because it may go up and then it may quickly go down, maybe because it's maybe a gold company, they found maybe a lot of gold, but then no more gold. What's going on? So momentum is pretty risky. So that's why it changes quickly. So every 3 months, they redecide, what are the best companies that we should put in that category. And that's why I like just, trusting Fidelity for that and don't do it myself because some people would say, okay, I'm going to, let's say, to buy maybe just the momentum factor, like my entire portfolio is momentum. Well, that's pretty risky because if, let's say, Fidelity doesn't do the job right, maybe you will lose money if they don't actually remove some companies that they should remove from those momentum factors. And well, Fidelity, because it contains all the factors, kind of balances this, because momentum is just one thing, but you also have low volatility, which basically are companies that, as it says, have lower volatility because they are more stable, they are more like stable companies. So even if the momentum is a little bit, I would say, volatile, well, low vol will take care of actually smoothing maybe your adventure into the stock market through FEQT. So that's why I'm trusting this fund, and I really like it.
It's so
Yeah.
fantastic, and thank you for putting all the effort because I know it takes quite a lot of time to take a look at them with close diligence, comparing them head to head, and adding a lot of value. And I believe these type of posts have been really getting a lot of traction on Blossom. So that's super.
Yes. And I didn't answer actually fully your question because I have another ETF. I have two
Yes,
ETFs,
FINN.
FINN, yes. So FEQT is my core. Currently, I think it represents almost 90% or 87% of my portfolio. I've been actually, and I've been wanting to add a little bit more, I would say, adventures to my portfolio, a little bit more volatility, but not too much because I don't like volatility. I like it, when it's a little bit predictable, but I want a little bit more horsepower. And I think what I learned on blossoming that is that it's okay to have a portfolio with some portions that travel at a different speed. So you can have, let's say, your core portfolio, which is your favorite EQT, which is traveling at one speed. And then you have like a fast lane, which in my case, it's FINN, which is the Fidelity Global Innovators Fund. And it's pretty actually on the scale of risk. It classifies, I think, as high risk because this fund, which is actively managed, so you depend on portfolio managers to make the right picks for you. It contains, I think, about 80, 90 companies, which are viewed as potentially disruptive companies. So companies that are, like, let's say Palantir, let's say, there's NVIDIA, you have Apple, I think at the moment, but you also have some other companies, maybe less well known. So you are picking companies, maybe from the small caps, you are picking companies from what is considered as noise for even FEQT and for XEQT, it's really, really background noise because those are really, really, really hidden behind these huge market cap companies. But through this FINN, I am investing in companies that have the potential to have great returns, but also maybe have the potential to have more volatility. What I found is that FINN, I think in 2020 during the COVID, it had a 100% return. So, of course, past return is not a guarantee of future returns. So it doesn't mean that I will get that next year or even in 10 years. Maybe it was maybe just a one-time event. But I found it interesting. I said, well, how can this happen? An ETF that delivers so much returns. So I looked at 2021. 2022, it was, I think, really bad. I think, but the market was really bad in 2022. Yeah, I think it was like minus 20%. But then the year after, it went up to plus 30%. And last year, plus, I think, 55 or 60%. I said, well, that's interesting. I mean, of course, you have the potential to huge downsides because it's actually, its benchmark is the NASDAQ. So it's trying to outperform the NASDAQ index, but you have the potential to have like huge gains. So that's why I'm keeping it in check with, let's say, 10% of my portfolio into that FINN, but it has the potential to basically, delivers more returns that I would then be able to rebalance into my core FEQT portfolio. So basically, it's exceeding more money than my 10%. But then I would take, let's say, if 1 year it increases and occupies 15% of my portfolio, I would take money and take those 5% and put it back into my core ETF and keep it maybe this way. So it's a little bit of an experiment to see if this can work. But I think it has the potential to deliver interesting returns. So let's see, and I'll definitely keep everyone posted on that.
That would be interesting to see over time. And that's one of the things I love about Blossom. Folks such as yourself do sharing your philosophy, how you go about investing, as well as your decision. And you're very well spoken as well around the why behind it. Not just, hey, I made this switch. No, what was the thinking behind it? And that's how the learning happens a lot of times, because we reflect on those, we engage and interact. If you could
Absolutely.
go back to your 22-year-old self, Regis, what piece of advice would you provide to yourself?
Oh yeah, so that was 22 back. That was in 1996, if my math is correct. So back then, I was just spending my entire money, my entire paycheck. I was spending on electronics. I was spending on computers, of course, on essential things like my rent. Well, even though it was not a rent, it was actually I had bought an apartment, but back then they were actually more accessible than today. But yeah, I was spending my entire paycheck. So I would say, well, kid, calm down. Don't. It's not necessary to spend your entire paycheck on things. You can just keep $10, $20 a month. Just put it aside, invest it. Well, back in '96, you didn't have actually Wealthsimple. You didn't have those platforms. Find a way to invest it. To go to your bank manager, of course. Maybe that was the only solution. Maybe buy some Apple stock. Maybe buy some Google stock. That would be nice. Those are like they were getting, well, Apple back in 96, that was before the iPod. So I think the stock was fairly low. It was like company in really deep trouble. And I was actually looking at the posting of someone on Blossom. He said, well, I just sold my entire Apple stock for retirement because when I bought it, it was like $1 per share. I said, wow, $1 per share. And if you look at the stock today, and the stock you see today went through multiple stock splits. Can you imagine? I mean, but of course, who would have guessed? I mean, when I was looking at Apple back then, I said, well, Apple maybe is a dead company. How can it go back on track, with products that people wants to buy? I mean, it's those people, they had a strong conviction, that's amazing, I think. And that's what I don't have, because I don't want, I'm not actually someone who goes to to bet on horses and to bet on things. And so even today, I wouldn't be able to find the next Apple. I mean, and put my money in that. So that's why I'm going with all-in-one ETFs, because I don't have to juggle with that. But back then, yes, if I was going back to the young myself, yeah, I would say, find a way to make your money work in a smart way. And I'm amazed because many young kids today, I would say young adults, that's what they are doing. They are investing at 19, 20, 22, 25. They are investing. If they do it, like even a small amount of money over 40 years,
Mhm.
I mean, the return is amazing. Even if you go it all into the stock market. Of course, you go through the ups and downs, but I mean, after 40 years, the compounding effect is just like marvelous. It just works. So yeah, that's something that I would tell myself. You can afford $20 per month. I was spending all my money. I mean, every morning I was buying like a Tim Hortons. That's like what, $2 over 10 days. That's $20 over an entire month. It's like what, $50. I mean,
Mhm.
come on.
That's up, right? Yeah.
Well,
Yeah.
it's okay to buy a coffee, but maybe don't do it every day, or maybe do it, but find a way to take $2
Also
every day.
save and invest, right? Yeah.
$2 every day. I mean, it's like $40 a month. I mean, it's pretty easy to put aside.
Yeah, it's about those choices and making sure the time is on your side. Along the same vein, how about for those who are in their 40s, 50s, or maybe and still either haven't started or started investing, but they're just thinking about like, I lost all my time. It's too late. I'm not gonna, never
Yeah.
gonna catch up. What's your advice or thoughts for them?
Well, the concept of wealth and the concept of what do I need for retirement, it depends on everyone. I mean, and the needs and the target is different for everyone. Some people will say, well, I cannot retire until I have a $2 million portfolio. I mean, I cannot do it. I need that money. I need to do it because I need to have that, if I withdraw, let's say 4% every year, I need to have that money to do what I want to do, during my retirement. Some other people don't have maybe the same vision of retirement. Maybe they will say, no. I mean, maybe if I just have maybe, let's say, 500,000 is enough for me, because maybe, I will sell my house, so I will have another, let's say, $400,000. Or maybe they will find, other sources of, let's say, of income that are sleeping somewhere, or they just need, maybe they need just lower money to retire. They don't need millions of dollars to retire. If you're in your 40, if you're in your 50, whatever age bracket you are in, you need, I think, to plan how you see your retirement. What is your goal? Of course, when you're 20, that seems like, off, but it's really, I mean, it's really far in your life, so you don't really realize it. When you're in your 40, in your 50s, you say, well, it's getting closer and closer and closer, and I don't think I have enough money aside. Maybe if I want to travel when I retire, because the government will not give me enough money to afford this. So you need to make a plan. You need to plan it. Maybe you need to get, if you cannot do it yourself, which is totally fine, get a financial planner to say, okay, if I want to have this amount of money for my retirement, how much should I save today?
Mm-hmm.
I think there are some tools on the, well, at least on the government of Quebec website. You have some tools to like simulators, retirement
The
simulators.
calculators, yeah.
So let's say I want to have 30% of my current salary when I retire. So it's, let's say, $20,000 per year, and the government will give me this. So I need to basically get extra money. So how much money should I get aside now and invest for how many years if I want to reach that goal? So I think it's really important to do that, to basically have a strategy, have a clear view of what it takes. If it's too much, if you cannot afford it, it's totally okay, because we all have expenses, living expenses, and it's getting higher and higher, unfortunately. So, what is the minimum I should basically invest consistently, and
Mm-hmm.
what is the minimum I'm able to afford, and what it will mean, let's say, 20 years down the road? What will I get? And so, it's important to basically see numbers. See what it means, do simulations, and get advices if needed, to have a plan. Because if you don't have any plans and you are in your 60s, then you may get stuck maybe with a low pension, maybe,
Mm-hmm.
and that's what I didn't want. I didn't want basically to, in 15 years, just say, okay, what is the government giving me? Oh my God, it's not
Mm-hmm.
enough. Well, now it's too late, because I don't have any income to build the wealth needed for what I want to do during my retirement. So planning, and it's never too late. If you're in your 40s, even in your 50s, but like I was in, it's not too late to plan, make simulations, have a target, and then be consistent with your goal. I think that's the key.
Definitely. Recently, you did a memorable trip to Europe with your son, representing Blossom, wearing the t-shirt just like what you're wearing, and also having spoken at different occasions on Blossom, how close you and your son Anthony are. You've attended different Blossom events, particularly Anthony. I know for sure Anthony has attended. I'm not sure if you were able to make it or not, but Anthony
I
did
was
attend.
not.
No,
Yes,
but you were there. Were you there at the one of those opening at TSX, or no? You were there at that one, right?
I
Yes.
was at the SX. Yes, yes, yes.
How much of an impact has Blossom had in terms of the conversation that you have with your son, but also in terms of giving you that motivation to wanting to be part of this community? You're very active.
I would say I never was, let's say, like a sport guy, uh, I could, and when you have kids, you never know what will be their strength. And I was a kind of lucky, I would say, because Anthony was a little bit like me when I was his age. So he was not like really into sports. Well, it was okay to do a little bit of sport, but it's not something that I prefer to be. Let's say, build things, discover things, do research, investigate. And so I was really like him. I was seeing myself through what he was doing. So when he was 8, he was really curious about programming languages. I introduced him to HTML, and web languages. So, and within 1 month, he was able to build a website. And then 1 month later, he did something else. I said, my God, this kid is really. I used to be the master. Now I'm just actually the learner. He teaches me every time. The same with the stock market. He went in first with Blossom, and then he introduced me to it. Kept actually evolving and learning more and more and more about stocks, about how it works. And then, of course, as you know, because he's called the Rocket Man, he is into aerospace engineering in Montreal. So he's really into space stocks and this kind of thing. But he does not just actually invest and everything. He's actually going deeper into the numbers of those companies, into the technologies and everything. So I mean, he's really into researching things and not just following and buying. So yeah, I mean, and when we went to Europe, and that was actually it was more of a disconnect and recharge kind of event, because life is moving quickly, and I mean, he's really busy at school and everything. I'm extremely busy at work and with all what we're doing, as parents, and on a daily basis. So I really had the need to disconnect from that, the trend and recharge as well my batteries. And traveling is I find it a great way to do that, because you are actually out of your daily habits. You are
Mm-hmm.
doing something else, and you're also discovering. And so it was a great way to disconnect. And also, we had our Blossoms t-shirts because we found it like a nice way also to promote, kind of, because in Europe, nobody was knowing Blossom. It was not known back then, but we found it like a nice thing to show actually the Blossom communities that we were actually, hey, here we are in Italy, and Blossom is with us. It was a really great experience.
That's so
Um,
thoughtful as well.
well, I think it depends on your mood, because I like, let's say, I mean, for example, I really love, and I'm going next week to New York because of the Nasdaq event with Blossom. Um, so I love being, in the middle of Times Square with all this energy and all those lights and all the thing. It's as if you are actually recharging through all the electricity that is over there. You are wow. But then sometimes it's overwhelming as well. So then I enjoy as well, like being in some like south of France, let's say on a quiet beach, that's hidden somewhere. Nobody knows about it, and you have like the sea in front of you, and all you hear nothing but the wind, the sun, and that's it. No overwhelming energy, no nothing. So I think it really depends on your mood. It
What's
is.
the best piece of advice that you have ever received, whether it's financial or life related, that you can leave us with?
Well, I would say two things. One that I've always followed is actually the famous expression, which is originally from Horace, which is a Greek, back in the 50 or 40 before Christ. He said "Carpe diem." Carpe Diem, which is also famous because of that movie with Robin Williams, where he was actually, that was his motto, Carpe Diem, which basically means you have to seize the day. So when you have the opportunity to do something today, well, do it today, because maybe tomorrow it won't happen anymore. You have the opportunity to maybe, it can be something as crazy as, you're, let's say, in your 20s, and then you are in the cafeteria, and then you find there's a nice woman or a nice boy close to you. Carpe diem, just talk to that person, and maybe something will happen. So you have to seize the opportunity, seize the day. And that's what I put in practice when I was an entrepreneur, is that, when you're running your business, you have to make things happen. Things do not happen automatically, magically. You have to, let's say you have to go to a networking event to meet some people. So you have to seize the opportunities that are in front of you. That was, and that was my motto for the past, I would say, uh, put it in practice in my 20s, maybe not too much because I could have invested earlier. But for the past 30 years, yes, Carpe Diem was something I had in mind. Another thing, so that was like a general philosophy, but more recently, something from Warren Buffett. He said, do not save what is left after spending, but spend what is left after saving.
Wow.
So I find it interesting because, yeah, sometimes you will just spend money, spend money, and then, oh, shoot, I don't have enough money to
Mhm.
save now. I just have like $10 left in my checking account. No, I will keep it. But let's say, if you took that $10 first, then you have a huge amount of money to spend. But you have, at least you made the action to put that money aside first,
Mhm.
even $10, $5. And then what's left seems huge to spend. So it's just a different perspective on, what's saving and what is spending. And I found it really interesting. I discovered it actually not long ago. And that's why I have now a set it and forget it, like
Yes.
automatic daily investment scheduling, because I invest first, and then what's left?
Yes.
Wow, it's interesting. I kind of nice money left. Well, now I'm able to feeling guilty because I saved from my future first. And then what's left? Well, it's for my today.
100%. It's about your frame of mind and what you prioritize most. In a way, you're following in the footsteps of Mr. Buffett. And with that, thank you so much, Regis, for coming on this show. I absolutely enjoyed this conversation. You have a world of wisdom. Thank you for all that you do on Blossom, you, Anthony, your family. We really appreciate that. And then continuing being the awesome person that you are, like the positivity that you share with us, the knowledge that you share with us, and being open to come on occasions like this. I really appreciate that. Thank you so much.
Well, thank you, Mo. It was a pleasure to be here with you. And I mean, I hope I'll be able to meet a lot of blossomers and a lot of people at the next events. And it's always fun to have those conversations. Thanks
I love
for
that.
having me today. And thank you, everyone.